Good morning and welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. If you need any more help afterwards or advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During the live session today, we will be running a poll, so please do engage with that and I'll reveal the results at the end. Hope everybody is well this morning. For those of you who haven't seen me before, my name is Judith Dugdale. I am a chartered accountant and I live up in the northwest of England. I work for a firm of chartered accountants called MHA Moore and Smalley, and we are a large independent firm covering the whole of the northwest of England. We have 8 offices and they start off in the north in Cumbria and they come down the M6 corridor covering Lancaster, Blackpool, Preston, Liverpool and also into Manchester. We look after a very, very wide range of businesses, anything from startups all the way up to large businesses and subsidiaries of international companies too. I head up the digital solutions team at Moore and Smalley, and what we do is very similar to any other accountant in terms of year-end accounts, corporate tax returns, strategic advice, personal tax returns, payroll outsourcing. We do everything that you would expect, the difference being that we look after clients who use cloud accounting software. So all of my team are experts in QuickBooks Online, and we've been working with QuickBooks for well over 6 years. We're an elite partner and we have a dedicated software support team who help our clients with ongoing queries, as well as helping those who need a digital system to get started. So we do the setup and the training, as well as that ongoing support afterwards. The beauty of cloud accounting software like QuickBooks is all the apps that link into it as well. So we're able to give advice on, depending on what sector you're in, which application might work best for your business, as well as lots of reporting applications and things like decks to help you get that information into your bookkeeping system as quickly as possible. As I mentioned, we deal with all manner of businesses and currently we are quite busy with a lot of sole traders and partnerships, helping them get their information ready for their self-assessment tax returns. So the self-assessment tax return is due by the end of January and that covers the period from last year. So the way self-assessment works, if you've not come across it yet, or maybe this is the first year that you're going to have to produce self-assessment tax return for your business, it works almost a year behind. So from most people will have a March year end and you will work, say, April 2020 to the end of March 2021. And any income that you derived during that period is due to be declared to HMRC on the self-assessment return by the 31st of January 2022. Depending on how much money you have made, how much profit you're declaring, will depend on the tax that you have to pay. Anyone can earn up to £12,500 and pay no tax as long as they don't have any other income from an employment or maybe a pension or investments. So if you literally just run your own business, the first £12,500 you won't pay any tax. Obviously, hopefully people will be running a business and make more money than that, and that is when the self-assessment scheme kicks in and calculates how much tax you owe, including income tax and national insurance. If you earn enough money to owe more than £1,000 of tax, you end up having to pay what you owe for last year, and then they expect you to pay half for next year. So you're effectively paying a bit of it in advance, and you would do that half in January and another half in July. The theory being that when you get to the following January, you've paid the tax that should be due. Any overpayment is deducted and paid back to you. What I wanted to just touch on around the self-assessment side of things is just a few things that we've seen flag up with our clients. So, for example, a lot of our clients are having to give us the information for things like the furlough money that they claimed for any of their staff. What some people didn't realise is that furlough income is a taxable income source. Now, you should have, obviously, wages to offset against that. So that bit tends not to be too much of an issue. But you just got to remember that income is, the income that the government gave you for that furlough is a taxable income. And it's really important that people remember about the self-employed income support grants. So the self-employed who just work by themselves and are not on a payroll, they couldn't get furlough income, but what they could get was self-employed income support grants. And they came through once a quarter, and they were based on the amount of money you declared in the past. That income is taxable as well. So you just need to make sure that any of that income that you got, you do declare that on your self-assessment tax return. HMRC know that you had it. So I know some people have accidentally left it off their returns. HMRC are straight back to you to say you've not declared it. The other thing is they're doing quite a lot of investigations at the moment into people that have claimed furlough and people that have claimed self-employed income support grants. The investigations basically are checking that what you claimed was correct. So on the furlough side, it's going to employers, having a look at the records to see whether that they actually did have staff, that they were paying the furlough income directly to those staff, that they weren't claiming more back than what they were actually paying people. And on the self-employed income support grant, it's all around whether you needed the money. So when you claimed the self-employed income support grant, there was a question that asked you if you had been adversely affected by COVID-19. If you answered yes to that, then you were entitled to claim the grant. What they're now seeing is that there are plenty of individuals who have claimed the income support grant, but their actual income is higher than it was before. So those people are getting investigations, and ultimately there is obviously tax to pay on the grant that you got, and in certain circumstances HMRC are asking for that self-employed income support grant back. If you do get asked to partake in an investigation, please do not ignore the letters. We've seen it many, many times where people think that if they just ignore the letters, it will all go away, and it definitely will not go away. And the interest that is levied on people who do ignore it, the interest in itself can be really high. Also penalties for not filing things on time. They just keep rolling and adding, and then they add interest on top of it. So it's really key that if you get any contact from HMRC, that you do make sure that you get back in touch with them as soon as possible. Please note that they will never text you. You will not get a text asking you to click on a link. There are some scams out there at the moment, so just be aware of those, and just make sure that you don't fall foul of any of those scammers. They will write to you, and occasionally, if they do have the contact with you via email in the past, there's very occasionally that they might email you, but I would always send anything you get from HMRC directly to your accountant first, just to make sure that it's not a scam, and get their advice on how to reply to those letters. There is something called tax protection schemes out there, and that is almost a bit like an insurance policy. You pay an amount, usually run by accountants, but also Chamber of Commerce, Federation of Small Businesses. They have their own schemes as well. And what it means is if you do get an investigation from HMRC, there is some money available to you to cover the costs of professional help. So if you haven't looked at that before, it's maybe worth having a look at that. So that's tax protection insurance policies. So finally, the other thing I just wanted to mention as well is I know people think that accountants charge a lot of money. Ultimately, accountants are based on time. Our number one biggest cost is our staff, and we have to pay our staff the going salary. Make sure that we retain the best people that work for us. So that does mean that there is a significant cost involved in doing self-assessment tax returns. So because it is all about the amount of time that we spend on a self-assessment that directly affects the fee that we charge, it's really, really important for you to give the information that we ask for as quickly as you can and all in one go. So my top tips for reducing your self-assessment fee for actually producing the return from an accountant is: one, make sure that the accountant gives you what we call a prepared by client list. And this is just a simple list of all the things that they will need to be able to do your self-assessment return. If you send all of that in one go, that keeps the time costs down. The second thing is to do as much of the work as you possibly can in terms of getting everything together. If we get off somebody access to their QuickBooks license, for example, and within that license they've matched off all their banking transactions and they've put everything, all their income in, assigned all their expenses, and we know that the bank account's all nice and linked, that is a fantastic starting point, and it makes it a lot quicker for us to produce that self-assessment return. If, however, we get a bag of receipts, and believe me, we still get lots and lots of clients that gives us bags of receipts, we've got to write that down, and we've got to write every single one, be it into Excel or using QuickBooks ourselves. We've got to put all that data in, so that is a lot of time, and therefore that fee is an awful lot more. The other top tip is do it early. So accountants from, I'd say, November onwards get incredibly busy trying to make sure that they can get all their client self-assessment returns done. That means people having to work overtime, it means long hours, and therefore the fees tend to be a little bit higher. If you can negotiate with your accountant to bring in your information at a time where they are less busy, then you might be able to negotiate a bit of a bargain price. So yeah, top tips: make sure you give it exactly what they ask for, when they ask for it, and try and get it in early and see if you can negotiate a bit of a lower fee on that basis. Right, I'll straight get on to taking the questions for you. We have Effion on Twitter direct message has messaged in. She says, I've not yet registered my company, but have developed my first MVP, minimum viable product. How would I accept payments for this? Can I use my personal account? Right. So there's two things here is, are you going to be registering a company? Are you going to be trading as a company, or are you going to be trading as a sole trader, self-employed person? If you're going to be doing it as self-employed and you're going to, or a sole trader, then you can use your personal account. I would highly recommend, even if you're going to be doing it as a sole trader, to set up a separate personal account. I would recommend something like Starling, where it's all automated, very, very low fees. It's all online and you get the apps on your phone. That would be my preference. What we want to try and do is keep your personal items away from anything to do with the business. HMRC can and do investigations into people at any point. And when they do an investigation into somebody that is acting as a sole trader, they will ask for the personal bank accounts to do with that trade. If you have all your income or your personal things all in one bank account as well as your business, then they're going to be looking at all of that information as well. And you don't want to give more information than you need to. So yes, you can accept the payments into a personal account, but please set up a separate one and keep it all in a separate account. It makes it so much easier to do your bookkeeping. And again, as I said before, if you have to give that information to your accountant, it's so much easier if it's all in one place. If you are going to be trading as a limited company, then you need to set up the company ASAP. Now, it takes less than 24 hours. If you go to Companies House, if you just Google Companies House, you go on there, you can actually set up your own company within a matter of minutes. It's really simple, straightforward to do. Not everybody likes doing it themselves, and you could speak to an accountant and they will get it set up for you and take a bit of that hassle away, but they will obviously charge you to do that process. But you need to register that company. You can't open a bank account in your company name until Companies House give you a certificate of incorporation. What you can do is, if you're just struggling a little bit and you need to take some payments immediately, just make sure you keep details of those, because you will have to declare those as self-assessment income until your company is set up. So the easiest and the quickest thing to do is get your company set up, then you can set up your bank account. And again, I would go with something like Starling, where it's a very quick and easy setup process, because bank accounts can take a while to get set up. I hope that helps. The next message is from Lewis on Facebook Messenger. He has just started his self-employed journey, but he wants to make sure he's set up properly from the start. It's looking like I might be able to do around £80,000 in the coming year. Would you suggest registering for that now? What about MTD? So for those of you who've not heard of MTD, that is Making Tax Digital. Making Tax Digital is a part of the VAT side of taxes at the moment, albeit it is going to come through into income tax in a few years' time. Making Tax Digital means that you have to use digital software to record all your transactions for your business. So that's your sales, your purchases, your bank transactions. And it also means you've got to deliver your VAT return electronically directly from software to HMRC. Now, if you are going to be turning over at about £80,000, Lewis, you don't actually have to register for VAT yet. The VAT rules are that if your turnover hits 85,000 in any 12-month period or less, then you have to register for that. VAT registration allows you to claim that back on things that you buy. So maybe buying a laptop, for example, for your business, there'll be VAT on that. If you're VAT registered, you can claim that VAT back. However, it does mean that you have to charge VAT on all your sales. I'm not sure what type of business you're involved in, Lewis. So a couple of tips are, if you are a what we call a business to business self-employed person, that means that you will likely be dealing with companies and they are likely to be VAT registered. Therefore, if you're VAT registered, it's no real change to your customers, because they can, whatever VAT you put on your sales, they can claim that back. However, if you're doing business to consumers, any VAT, once you're VAT registered in that scenario, your prices obviously go up to the end user because they can't claim the VAT back. So let's say, for example, you are a hairdresser and you normally charge, let's say, £20 for a boy's haircut. At the moment, if you're not VAT registered, it's £20. As soon as you become VAT registered, either that £20 includes that, which means you're going to get less money because you've got to claim the VAT, you've got to pay the VAT element over to HMRC, or your price will then be £20 plus VAT, which means then you are more expensive to your consumers. So it kind of depends, Lewis, on what sector you're in as to whether you should register for VAT early. I think if you're dealing with general public, I would wait until you get nearer to that £85,000 level. And you can use things like QuickBooks Online to track your sales. You can run reports which constantly update daily, showing you what your turnover is. So it's really easy to track it. And then, yeah, as you're getting near that point, then register with HMRC for VAT. And then you would have to comply with Making Tax Digital immediately. The next question is Andy on Twitter, a direct message. So Andy says, you mentioned investigations into the SEISS payments. What sort of paperwork do we need to make sure we're ready for that, just in case? So, Andy, it's the same information that you would keep to prepare your self-assessment return. So you would need to keep your details of your income and details of all your expenses, just like you have to do for your business anyway. There's nothing extra that you need to do other than making sure that you recorded that self-employed income support grant on your self-assessment tax return. It goes in a separate box. So you have your turnover, you have all your expenses, which gives you profit, and then your self-employed income support grant goes in a separate box. And that's because it feeds in to their system so that they can check what you say you had agrees back to what they paid you. What the fundamental bit that they're looking at is, has your turnover, so the line at the top before you include your grant, is that turnover less than it was the year before? And if it is, then they'll be fine. Great, you've actually have been adversely affected, so you were right to claim those grants. If, however, it looks like you've actually turned over more and made more profit as well, then they'll be questioning why you claimed the grants when you were actually doing better than you'd previously done. Now, it might be that at the start of the year, you were performing very, very poorly because you were forced to shut and you had no income. And at that point, you were spot on claiming the grant. It might then be, as things opened up, you then suddenly had an influx of demand and you were really, really busy. And as long as in that period you didn't claim the grant, then you have done nothing wrong. And you'll be able to show that by showing that your month-on-month sales and showing that there was a trajectory upwards once COVID restrictions lifted, and you'll be absolutely fine. So it's making sure you've got that information to hand of almost like your weekly, monthly sales and how they fluctuated during the year. And hopefully they will be then reflected by any grants that you did claim. And if you've got that information, then you'll be absolutely fine. I've had a message from Sarah on Instagram direct message. Sarah says, what sort of mistakes are some of your clients making when it comes to investigations and how they run furlough? Just want to make sure we haven't made any of those too. So luckily for us, our clients that have had the furlough investigations, none of them have been found to have made any errors. We did do an awful lot of claims on behalf of our clients, so they were checked and double checked. What I've heard from the wider community is where people have been doing their furlough claims on behalf of their staff, and instead of paying them 80%, instead of doing the claim of 80% of what they've been earning previously, they've been maybe overstating that amount. So let's say somebody earned, I don't know, £20,000 a year, and it was a salary. When they've been doing the furlough claim, they've been putting down that their salary was maybe 23,000, 24,000, which meant that the employee ended up with more money. That is one of the areas that have been fed back in the wider accountancy community as being a bit of an issue with furlough. The second, furlough investigations as well, that have been getting quite a bit of press, is where employees have claimed furlough for their staff, but their staff were still working. Now, obviously, there were two types of furlough. The initial furlough scheme was you could not work if you were claiming furlough. And then there was a secondary scheme later on, which was where we had the flexible furlough, where people could work for part of the week and then they were furloughed for the rest of the week. Those is obviously quite a complex situation. They seem to be less of an issue. It's more that initial start when COVID first hit and people were in lockdown and people were put onto furlough, but there were some rogue employers who were actually still getting their employees to come into work, but they were claiming furlough as well. And you might wonder, like, how do they know? Well, people have been tipping off disgruntled employees that have been forced to work, and they know that they've been furloughed on the system as well, have sort of shopped their employers. And then there's also things around records on Facebook. A lot of people forget that social media, you're doing all your advertising and you're nominating how great such and such a body's been at customer service. Well, if you're nominating somebody who's been brilliant at customer service, but you've had them on a furlough, then they shouldn't have been brilliant at customer service because they shouldn't have been working. So they have lots of ways of checking those things. So hopefully, Sarah, that there's nothing that you've done like that. Most people, when they do the checks, it all comes back absolutely fine. They just want confirmation of people not working, confirmation of what the salaries were before, pre-COVID, and what you've claimed during the furlough. And as long as they all match up, then there shouldn't be any issues for you. Got a message from Neil on Facebook Messenger. He says, I feel like HMRC can be a bit Jekyll and Hyde. I never know how to talk to them. There's been occasions where they've been really friendly, but often if you're on the wrong side of them, it's a nightmare. Any advice on how to raise things with HMRC, such as mistakes, but in a way that doesn't set them off? Neil, what I would say is if you've made a mistake, then it is better to come clean and go to HMRC. They much prefer people to come to them and declare a mistake. And if you do that, you're less likely to get penalties. If there is, people make mistakes, and if it's an error by accident that you haven't purposely tried to avoid paying tax, then there shouldn't be too much by way of penalties. I would actually always say, if you feel like you might have done something wrong, get some advice from an accountant. They can review it, make sure it definitely is a mistake, because actually maybe you haven't done anything wrong at all. And then the accountant can represent you. It's called being an agent. And agents can speak directly with HMRC, and we can word things in a way that we know will be more appealing to be received from HMRC, and, as you say, less likely to set them off. And also we know how to structure, if there's any tax that is due, we can structure payment plans and things for you so that it's not all due immediately. The next question I have is from Carly on Instagram direct message. How do tax write-offs work? I'm starting to get sponsorship deals on my Instagram profile, which is a lifestyle blog. A lot about what I blog about is day-to-day living. So could I write things like meals, clothes, tickets, etc. if I feature it on my profile? Well, Carly, HMRC have a rule, which is whether you're self-employed, whether you're trading as a company, anything that you want to offset against your taxable income has to be wholly and exclusively for your business. So if you are, as you said, a lifestyle blog, and you are doing some reviews about, I don't know, the new Pizza Express that's opened in your area, it would be justifiable to go to Pizza Express, have a meal there, and then do a blog about it and include that cost of that meal as an offset against any income that you get from sponsorship deals. However, what I would say, it has to be reasonable, and it has to be an expected cost from the reasonable man in the street. That's sort of one of their rules they do. So if you went to Pizza Express and you had, I don't know, a starter and main course, and you put that through, then that would probably be deemed to be reasonable by most people if you're then blogging about it and getting income on the back of it. However, if you go to Pizza Express and you take 20 of your friends and you get through 10, 15 bottles of wine during your meal, and you put all that through, not one person is going to say, well, that's reasonable, because it's nothing to do with it. You also obviously need to be reasonable in the frequency of what you're putting through. So if you were going to put through a meal every few days and you were blogging about them constantly, then that would probably seem okay to HMRC. If you were putting every lunch and every evening meal through, then that isn't going to be okay. Again, I would say it's really worthwhile speaking to an accountant and just getting their feel for what they think is going to be something that's acceptable or not. Like I said, there's a reasonable person test. It's wholly and exclusively for the business, but sometimes people have a different idea of what is reasonable to what HMRC's reasonable is. So definitely get a bit of advice before you start claiming back lots and lots of expenses. I think I've got time for one quick question before we finish, and that's from Mick on Facebook Messenger. He says he's reopening his office in January, but one of his employees is refusing to get a vaccine. What can I do here? I want my staff back, but I want them vaccinated. Can I fire them if they aren't able to return to the office because of this? Mick, I'm really sorry, but it's a HR question that I would hate to give you the wrong advice. I've got a feeling that you can't sack somebody unless they're in the healthcare field where it is a condition set out by the government. So I would definitely definitely go and get some HR advice on that before you accidentally make the wrong decision and get into some hot water. Right, sorry about that. So the poll results are in. We asked you if you were aware that all the government funding from COVID was taxable, and 50% of you said yes and 50% said no. So hopefully you now all know that funding is taxable, and you'll make sure that you pop that in to your relevant tax calculations. So I'm glad we've helped you there. Come to the end of the show now, so it's just wanted to thank you for all your questions today. If you want to find out any more about setting up your own business, or any help in terms of what's tax allowable and what's not, please visit our website www.mooreandsmalley.co.uk, where we've got loads of information, including insight areas with videos and blogs on lots of different things that we've talked about today. If you've got a direct question for me, you can email myself on digitalsolutions@mooreandsmalley.co.uk. And it just leaves me to introduce the expert tomorrow, which is Ketan Makwana, and he is a business strategist and CEO of the Enterprise Lab. Tune in to learn all about digital assets such as cryptocurrencies and NFTs and how they affect the future of business and finance. And a final reminder that if you need any more help or advice, to join the official Intuit QuickBooks SME community group on Facebook, where accountants and business experts are on hand 24/7. Have a great day, everybody.